Happy pre-holiday Monday. As I said last week, it seems so strange to be closed in the middle of the week, but markets close early today and will be closed all day tomorrow for the July 4th Independence Day holiday. Today is July 3rd, 2023, and this is your Monday market update. There was a lot going on last week. Main news hit after Friday's video went out, and as you probably know by now, the Supreme Court ruled against the Biden administration's student loan forgiveness, and there's still more to report on that. Come back Friday to get more information on that and what it means to you and to the economy. Let's review last week and preview this start and stop holiday shortened week. Stocks rallied out of the gate on Monday as the dust up in Moscow was easing and German eco data supported equity gains. The bulls in the morning did not get things going strong enough to keep the momentum going as the news dried up and the market rolled over a bit into the afternoon. As we've seen so many times, when nothing is really going on, we look for anything. And the Dallas Fed survey was the eco data in the spotlight. Good news, and in this case, good news was bad news, as it supports more rate hikes to stay in play. There was an attempt to run back higher, but that failed also, and on more central bank concern, this time stoked by an IMF comment that the central banks will continue to fight their inflation fight. By the end of the day, the Dow was flat, S&P was down about 0.5%, the NASDAQ was down a bit over 1%. Stocks gapped higher on Tuesday as eco data in support of the soft landing came in. Durable goods, consumer confidence, even some AI company-specific news, mega caps led things higher, and central bank talk from the ECB was not enough to hold things down. All of the macro data lined up, and good news was good news. The Dow was up 2/3 S&P up almost 1.25%, and the NASDAQ was up over 1.5%. Wednesday brought markets to open slightly lower on a bit of digestion from the rally from Tuesday, and the reaction in the tech world to the Wall Street Journal article that the White House was going to add in chip restrictions to China. Chips like NVIDIA and AMD, along with some others, started out with the expected downturn, as you would expect, and they came back a bit before the day was done, but still down a little bit on the day. The market did turn positive mid-morning, and then news began to come in from this conference in Portugal that hosted the central bankers from Europe, from the European Central Bank, the Bank of England, the Bank of Japan, and of course our Federal Reserve. Nothing new, just more of the same. The fight is not finished, more work to be done, higher for longer. Are you getting the picture here? I compared this to parents last week, saying the same thing over and over again. Will we listen? I'm not so sure. Markets are fighting many data points, and as I've said time and time again, I think the central bank will take a back seat soon and will turn to valuations. Earnings drive stock returns in the long run, and we'll turn to those. Officially, earnings season starts again on July 14. Speaking of the Fed, in case we were not yet listening, there was a published report from Fed researchers, not the FOMC per se, but the PhDs at the Fed. Headline reads, "The Fed thinks catastrophe is coming for U.S. businesses." So, is this the new Chicken Little? I've told you I don't see anything that would be called a catastrophe. I just see more volatility, and I would not say that the train has left the station. The new bull market may have started, but that does not say that we cannot revisit some levels that we discussed. Overall, the Dow was down about 0.25%, S&P pretty much flat, and the NASDAQ was up 0.25%. Stocks headed higher again on Thursday as eco data provided fuel, resilient growth and high inflation, German CPI and U.S. jobless numbers. Overall, it does seem that investors, the market, is not listening or at least not paying attention to central bankers. Stocks were back in the green, and that held most of the morning. By early afternoon, the news wire slowed, and as the end of the week, month, and quarter approached, the book squaring took over. Dow was up about 0.75%, S&P up about 0.5%. The NASDAQ finished the day where it started, flat on the day. Friday brought the day with the final important eco data for the quarter with the PCE, and it was a good number if you're looking to see inflation cool. Consumer confidence from University of Michigan, along with inflation outlook, also supported the soft landing ideas again. That, along with the month, quarter, and half of year coming to an end, had stocks open higher. In other news, Apple topped $3 trillion in market cap, and that's news. Well, because it is. The Dow was up 0.75%. The S&P up about 1.25%. The NASDAQ up 1.5%. For the month, the Dow was up over 4.5%. S&P and NASDAQ both up over 6.5%. NASDAQ had its best first half since 1983, and the S&P had its best first half since 2019. Does the situation support all this? That will remain to be seen. Let's preview the week, and then we'll end with some fun facts for you to talk about the holiday barbecue. The first week of the month, always jobs week, and it will be important. As much as I don't agree with it, it is still a huge focus for our Federal Reserve. We'll get ADP, JOLTS, and jobless numbers on Thursday, non-farm payrolls on Friday. FOMC minutes will be out on Wednesday, and that will be a focus, but don't expect anything new. We will start the week with some eco data, but nothing so urgent to warrant the news prior to the holiday. And by the time we get back, we got to jobs and FOMC. So watch for all that. Okay, now for some talking points for the holiday. If you want to weigh, if you want to weigh the good and the bad, we'll talk more about the consumer and student loans on Friday. But according to a Morgan Stanley survey, 34% of individuals will not be able to complete the payments for student loans when they resume in October. Also in that same survey, 61% said they will cut back on spending within the next 6 months. Bank of America's CEO Brian Moynihan said that their data also shows that the consumers across the board are in fact pulling back on spending. Now, if you wonder about pickleball, what does it have to do with all this? A recent UBS study said that the rise of pickleball may be responsible for as much as $250 to $500 million in medical costs. Also, IPO for artwork. Yes, according to Wall Street Journal, there will be an expected $55 million IPO for Francis Bacon artwork. Now, recall the IPO market has been sleepy, but really, is this how we want it to wake up? Overall, though, on the optimistic side, as long as people have jobs, they seem to be spending. Service spending is still strong, and technically, as we move into the second half of the year, July is historically the fourth best performing month of the year. Positive month 59% of the time. There's a lot to look forward to in the next 6 months and beyond. I'll watch and report and add the planning notes on Fridays as well. Please share these videos. Check out the website where you can see the latest videos and the updated blogs. As we celebrate Independence Day here in the U.S., I will add 2 notes. First, I heard a great perspective on the recent travel delays and such, people sitting on their flights hours and hours late, stating that nothing is going right, nothing is working. They neglected to note that they were sitting in a big metal tube, fighting gravity and getting them from one place to another, hopefully safely. It doesn't always matter if the glass is half empty or half full. We can be grateful that we have a glass and that there's something in it. Be grateful for the United States with all that comes along with it. Have a great holiday and have a safe one. We'll see you on Friday.